Hey guys, it's Will. We are live for our Sunday stock talk here. We're going to jump into the markets as this week there's a lot of things heating up for the markets. We've seen some big movements over the last few days, and we're going to see how a lot of money is positioning this 24-hour period leading up to the markets we've been watching. Did a video today. We're watching some of the markets turning green here as we get ready for the week here. You see some of the companies opening up fairly green. We did see Big Bear AI, for example, off to a good start. They were jumping up to about $7.80 or $8 actually, just in after hours, kind of getting ready for Monday. So we do see, a lot of green hitting the markets, a nice recovery after what was a big dip on Friday. This is kind of what we were looking for. And there was mass panic. You might see the title of the thumbnail. Mass panic we saw on Friday after tariffs and after the government shutdown kind of extended. But these are the opportunities that we look for in the markets. These are the dips that we wait for, and we're going to watch at market open tomorrow morning how the market really continues into this week. But we do see a lot of growth in the sectors in AI specifically after that dip. And if you look at robotics, kind of same deal. Almost every stock is red with the recovery today as the markets seem to be buying back. Space tech also seems to be off to a great start. You got Rocket Labs up 5%, Redwire's up 3.5%, Black Sky is up, and AMD is continuing some of the rally up to $220 a share. So Lynn Ductaway Cleaning, what's going on? Good to see you here. Appreciate you. Thanks for tuning in. And then we got Pooh Wing says, what should we buy? Let's jump into it. So here's what I would love for you guys to do is comment your ticker symbols you're following right now. Be more than happy to take a look at what you're looking at for this week. And as far as what we're going to be watching this week, we can jump into some of the positions. One of the things that most investors do when they're in a position of leverage is they wait for pullbacks and they deploy capital. Now, we didn't have any short-term positions running when the markets corrected on Friday. In fact, we've been kind of patiently waiting and looking for an opportunity to buy in. So we have long-term positions that we haven't touched. You can see APLD is going to be one we're watching this week. Big Bear AI, as it consolidates between these levels here. Big Bear is poised for some breakouts as they've continued to hold that $7 price point and consolidated and jumped about 12% after the dip on Friday. So we're going to watch, maybe see if any of these companies pull back down to some of these previous resistance levels or any of the support levels that we saw on Friday, or what that looks like. And I see the ticker symbols. Jose saying Rich Tech. You got RCT, Poet, BBAI, BURU, quite a few there. Okay, so we're going to jump into it. And the first ticker symbol we got here is going to be RR, so Rich Tech Robotics. If we go over to a robotics watch list, I believe this company is there. We have been seeing them get some momentum up to that $6 price point. As they've continued to run up, they have faced a lot of manipulation in the past. This stock has seen manipulation and big sell-offs, so just watch out when we see them currently at the levels that they're at, around $6 a share. They are pulling back right now, and they just pulled back to some levels that are still in trend. Okay, so you have this greater uptrend here that is happening with Rich Tech Robotics, and they are a robotics company, I think, kind of in the AI space, but they haven't seen the type of growth financially just yet. And so that's why I've kind of held off really on them. They did bounce back down. They have a support level of previous resistance that they dropped back down to right around here, this level here, and it was a support. And then they had a recovery as they're continuing this overall uptrend. Now, Rich Tech Robotics, if I'm not mistaken, the market they're in, fully robotics. It's a good market to be in, but $1 billion almost on their market cap right now from a valuation standpoint. The quarterly revenues are still pretty low. Look at that. Revenue just 1 million bucks. Revenue's down 18%. And operating expenses are up 181%. So, Jose, I know that robotics are definitely a focus for a lot of people, and I do believe it's the next session of or the next phase of AI. One of the issues that I had with them originally was this: Rich Tech Robotics accepted into NVIDIA Connect program. I went ahead and applied and was able to get into this NVIDIA Connect program in about 10 minutes. They're kind of putting it on the first page of their website. And Elvis says, how is the market up if it's closed? That's just the pre-market and after hours trading that's going on there. We could still trade actually at this time. But yeah, the official close, we won't see market open. And most likely the biggest moves we will see happen right around market open tomorrow morning. But again, Rich Tech Robotics, they have this NVIDIA Connect program. And it's cool that they have real video of their product. That's always nice to see. When I'm seeing the real world usage of what they have going, I see some real world usage and some partnerships with different companies. They're fairly big on the fact that they have patents. Not always is it important that you have a patent on your company, because patents don't necessarily mean that that it's valuable even. And so while they have patents and they are in the the Rich Tech Robotics industry, they're in the robotics, they haven't seen the financials line up. So I don't think that this would be one that I really invest in. They do have $100 million in assets, which is good. They see some backing there, so the balance sheet looks not bad. But I do think that it's timing right now why they've seen a lot of growth. I guess there's fraud allegations. I don't know what's going on there. I don't usually click on these kind of third-party articles. It says there's a fraud allegation claiming misleading information about a supposed Walmart contract. Okay. Yeah, there was not any Walmart contract. But essentially, like, yeah, there's just a few things that are kind of red flaggy for me. Like, like if I wanted to get this thing that they're marketing on their website, I can go get this. I literally did it. I applied and was approved in about like 10 minutes. So like, if that's the main thing that they're sharing on their website as, we're a part of this program, and it's something that I could easily go get in 10 minutes, it's not really like, it's kind of just this like, look at this, when it's not really that big of a deal, I guess. When I see the real world usage, a lot of times I see the person like walking by behind the robot as it's like moving stuff. And I'm like, why don't they just have a cart? Does the robot really change all that much? Maybe. It's just, is the real world usage really there? Maybe. And so that's kind of what we see right now. Now, when it comes to the next stock we had here on the balance sheet. So again, that's kind of how it is. You could see it continue, but I don't see the risk to reward. I think there's a lot more solid places to deploy capital right now, especially in like the data center markets or the space tech markets that I'm going to be focusing on. But I'm down to continue to do some research on Rich Tech, and I do appreciate it. And if anything comes out related to Rich Tech, as far as contracts or why you're following it, that really pushes it in a bullish direction, definitely like let me know. I think it's a good stock to be looking at. And then RCT, Bravo says RCT. Bravo, why are you watching that stock? RCT, what is it? Red Cloud Holdings. Why are you watching that one, Bravo? All right, they're at $1.60. They've seen some manipulation up to about $1.53. That's kind of a little pump and dumpy right there. But we can take a look at their financials real quick. Let's take a look, RCT. And we'll jump into the product if the financials check out. Red Cloud holding $75 million market cap, very small company, and their revenue is at 15 million a quarter, negative 13 million expenses or net income, so negative 13 million. Oh, and then here's what you got there. Balance sheet on RCT, they have about $86 million in liabilities and they have 17 million in assets. They have more debt than they have money. They are in a hole and operating at a deficit. So I wouldn't touch the company. You can see their assets are up 188% year over year and their liabilities are down in comparison. So yeah, total liabilities greater than their total assets. Not a company I would follow. So for that reason, hopefully you understand, I'm just not going to look at their any of their technology or anything like that. Just wouldn't follow it because they're not really meeting the criteria. But I appreciate it. Thank you so much for tuning in and dropping that ticker symbol, bravo. I appreciate you. And hopefully that makes sense. You know, you just want to look for companies where the assets are usually greater. All right, 15-minute lecture says POET. No problem, bravo. Thanks for tuning in. So it is POET stock. Poet Technologies. Let's take a look. All right, essentially no revenue and negative net income, about 6 million. And balance sheet looks okay with about 40 million in equity. Assets are up, but liabilities have risen heavily as well, about 1,000%. Market cap's currently at 796 million. Let's see what market they're in, because this has got to be a market hype thing, unless we see something out that is really strong. Let's see. Full potential of artificial intelligence with our technology, optical interposer hardware products, cutting edge technology. Okay, let's see what they got. The outlook, they're innovating here in AI, blazing fast data transfers, versatile applications, optical interposer, view our products. I'm just gonna take a look at their products. Okay, so Teralites, optical engines. These are drivers and things that can optimize visuals. And are they a US company? Let's see. Toronto, Canada. Okay. Yeah, I mean, pretty big negative net income. Not a lot in equity. And then, unless they have something that's really good on the investor side from the news, we can kind of see what the press releases look like. Closing of 75 million investment, so they're raising money. That's totally fine. It's a growth stage thing, though. Most innovative awards. Do they have any contracts? No, they're presenting. They are presenting public offerings, private offerings. They're raising money, which is good. But they're kind of riding market hype right now. I see a lot of market hype currently. So I personally wouldn't touch them because they're very negative on the balance, or on the income side. You can see negative net income, basically no revenue. So I wouldn't touch them. You know, a yardstick for how you invest and how you measure companies, it's going to be based on, you know, if they're generating money, and this company is basically not generating any money. Yeah, I think like in the quarter we generated more from YouTube than they generated in total revenue. So this company is a $796 million market cap. They're losing money, and they only got about 40 million, or no, 20 million in equity. It's just, yeah, it's not really good. They're in a good market. So if they have growth in the market and they have some sort of release on the news that looks good, then great. Otherwise, they're not really in a position to grow. And we did see some probably some hype. I know there's a lot of hype out there, but it's really important, especially when the market's pulling back. See them start to pull back to previous resistance. They did bounce that $7 support. If they hold it, great. If not, you're seeing a resistance that if broken, they're selling back down to that $5 range on POET. They build chips that link GPUs together for better processing power. They haven't announced who invested yet. People are speculating, and it's possibly Nvidia. Yeah, I mean, it's a cool market. It seems like a good product, but speculation, and given what they have currently, if yardstick that you use to measure how much the company's bringing in value would be how much they're able to really raise, which they've raised some, and their revenue just doesn't really add up. And I think in this time, when there's so much hype in the markets, like it's really important to I'm going to choose companies personally that line up. I want companies that line up and have the financials that make sense. And if they don't make sense at all, then something else has to make a lot of sense. Like the product's got to make a lot of sense. The marketplace demand has got to make a ton of sense. And I just don't quite see that right now with this company. So hopefully that makes sense. Yeah, and I appreciate the ticker. All right, next one here. What's going on, Eric? What's going on, Grand Maple? Jose, you got Elvis. Garbanzo Bean is here. What's going on? Shiva Kumar, thanks for tuning in. Robin. Steven, what's going on? Steven says the bear. And Kofi, thanks for tuning in. Yeah, so Dr. Gonzo, thanks for tuning in. And so the next one we got here is Big Bear. Now, we did a full breakdown on Big Bear yesterday. And this stock is in the defense market. And it's almost crazy how much real world usage I've personally seen from the stock. So I might be a little bit biased. But if we go to the AI defense, jump into Big Bear, we saw Big Bear push up to $8.80 and then sold back down to $6.70 and then recovered about 8%. They're holding that $7.50 level. So Big Bear AI has been seeing a lot more growth in their contracts this year and in their deployments of their Veriscan. They haven't seen it show up really in their financials. But I just went through the airport and I was going through LAX, flying out here to Buenos Aires. It's beautiful here, spring. It's raining outside. It's sunny during the day, very nice temperatures. Just had a asado with my wife at a restaurant. Really good time. And, you could see here, Los Angeles International Airport, JFK, Dallas, Denver, Chicago, Charlotte, they've deployed. And I just saw them there when we went by the airport. Now, Big Bear also has had some negative net income on some things that they wrote off, like goodwill impairment and some other things that put them in a more negative net income than we would have expected, but not necessarily that they were losing cash. In fact, their cash jumped to about $600 million in assets. So they are seeing some growth on that side. They've pulled back down to about 2.5 billion market cap. They're holding that $7 price range. And we started investing in them around $2 a share. I think they're eventually going to be up into a longer term level of between $10 to $15 a share. And it's just a very steady. There are different times when they've pulled back, but I think that they're a good long-term play that I'm going to hold. Short term though, you see that volatility. They've had some ups and downs. Look at that. They've climbed up and down, and they are holding above $7 right now. And they continue between that $7 and $8 price point quite often. So they're consolidating. Next target bullish is going to be that $8 price point. We're going to watch it market open, and then the support level around $7. One thing that we're going to do too for Big Bear is they just announced some new contracts in the Panama Canal. So I really want to stay up to date on those, because I think outside of their Veriscan, they have a unique positioning there. And with their recent partnerships in space tech too, there's some good ones. Sam is here, says BITF. We can take a look there. And Paul, thanks for tuning in, Paul. So Paul says I sold BBAI when it went to the highest. Awesome. Hey, great. I'm glad you were able to. And then you bought back at close on Friday. That's a perfect trade there. Nice job. Um, and so Big Bear, we're going to continue to watch it. I definitely have long-term holds. We're going to continue to look at. When you look at where they're connected, we could jump into Mercatus here on the machine. This is our recent software we just released over the last few weeks. If you haven't grabbed it, you can always go find it in the first link in the description to get the full breakdown. But basically, you can see they're connected with Palantir. They're connected over in the defense markets, Big Bear. If we click into them and we get the analysis, most projections from OpenAI are actually fairly bearish. And they're talking about how RSI, MACD, things like that look overextended. I think if we jump into Grok, we might get another picture on Big Bear. The Palantir partnership was one thing, but really where I was seeing the most potential with Big Bear, and some people might say, well, what about other tech in this? I think it's the data. I think all the data that they're going to collect and are collecting right now of all the passengers coming in and out of the US, they've kind of talked about it right to us. As we saw the institutional buying kind of increase there up to 197 in increased positions with like BlackRock and Vanguard and State Street buying in after their recent earnings. They also came out with this article that talks about the FIFA World Cup and the 2028 Olympics that are coming up in the next couple of years and how they're positioning themselves. And I thought, that makes a lot of sense. I think the data side of what they're doing is going to be the biggest. Now, here's what we saw on Mercatus. Projections on the next week for Grok, and most projections are looking for corrections back down on Big Bear. We do see maybe in the next month here, Grok is projecting it to hold that $7 range. And the confidence score was about 70%. One thing to note, because we consider the SEC filings, we consider the insider trading, and all the things that these models like Grok or OpenAI or Claude otherwise don't have access to, we feed into the models. And we just recently announced that we're going to be rolling in actually to take the different time frame projections that we get from the best AI models in the world paired with the best data sources we can get them. Those projections, what if we could click a button and have D-Wave synthesize the info and come out with which time frame might be the most likely, or IonQ or Rigetti, so quantum technology, something we're looking to integrate into some of the analysis for projections over in Mercatus. So I just want to tell you guys, it's exciting. How many of you guys would love to use quantum computing technology in your investing? You don't have to wait. The future is here. It's coming, and you can get access in the first link below. So go grab it if you want to be there. You also get access to StockMate if you want to join in at our market live session tomorrow morning at Market Open. We're there every day, Monday through Friday, unless we're doing something crazy like traveling, which we did miss a day this past week, and half a session because we were on a plane. But we still did a live session at the airport actually. But if you want to tune in to our live session tomorrow morning, it is there, second link below for StockMates. We'll have some targets as well. The next ticker symbol that we got here, isn't that cool? Yeah, that's really exciting. The next ticker symbol is going to be, let's see what we got. Rich Tech, it was Jose says, thanks, appreciate it. Yeah, of course. Garbanzo, TSSI. Elvis says TSSI. Yeah, so let's take a look real quick over in the data center market. So if we go over to the data center watch list, some of the top stocks we're watching, they're definitely APLD is one. We were trading this past week. TSSI, we were actually trading this on Tuesday, and we were able to make a 10% gain on this company, and then we ended up selling in a trade that we took back here. I think it was this move we caught right at market open here. Super great trade that we got to take advantage of. And then we saw a break pattern, sell back down to that previous resistance level at about $15 a share. We saw it recover about 15% from there. and it's currently holding above a support level at around $18, just under that, about 17.75. You're going to see this previous resistance along with this support level, support right here, kind of around this level here. I see that consolidation, see that previous support there around 1750, 1775. It did break back above there and push above the EMA. So from a technical side, it looks bullish, or continuing the bull trend. Potentially that maybe not the exact trajectory that we had going before this correction, but maybe we see that move, or it could continue back up, and that was an overreaction from some of the news that came out around tariffs and things like that. Or, extendedly, if we see that thing continue, you do have support level around 1775. And if it can't make that 15 to 20% run, we're looking at about $15 support. Now, TSSI is in data centers, and they focus specifically on providing cooling systems, racking, installation, software optimization in data center facilities. And they have seen some increases in revenue annually. They've been growing about 170% revenue growth year over year. They are a company I personally like to invest in because they have the numbers to back it up, and they're in the market to back it up. Only thing that's a little iffy on them is that their liabilities are kind of high and have been tightly knitted to their assets. So their actual equity is only around 10 million bucks. So not the best as far as the total assets, excuse me. But when you look at the investor relations, I'm going to jump back over to what they've come out with. They've also raised some money in this last quarter, 51 million there, 58 million over there. So in this next quarter, they're most likely going to come in with some more on the balance sheet and probably reduce that debt. Their revenue was up 262% in the last quarter. So they're growing. And why is that? Well, it's because they're providing the solutions as more big tech companies like AI companies, including Microsoft, talking about, NVIDIA and Tesla and Apple, they're all building data centers, and they need actual contractors to help them do it. They need to have people go out and optimize the data centers, build the racks, the cooling systems, plug everything in, optimize things, and create modular infrastructure that allows them to, for example, rent out their data centers or provide GPU usage to other companies. And that's all kind of technical. And this company goes in and actually does that. And so we've seen them get some growth. We like the company. They did see a recent correction down with the rest of the market, down from that $18 price point back to where they were in October. But overall uptrend, we see them up about 140% over the 6 months and potentially continuing some of their growth right now. So I like TSSI. We're going to continue to watch them. I like to also trade them recently, so we're going to see how they react at market open. If any opportunities present themselves, we're going to watch that support at around 1775. That's a level to watch if they can bounce it, potentially make that 5 to 10 to 20% recovery, or we'll just see how the markets react. We might see everything push up green like it is now, push up into market open, and then we see a continued sell-off. We got to really watch the volume. We got to watch where things are moving, because one thing you'll notice is a lot of stocks recovering today, but the volume, not necessarily do we see the volume increase. And that's sometimes an indication this could be a slight pullback before we see things continue down a little bit more. And so if that's the case, we might end up trading the inverse of some of these stocks at market open. We might even trade SOXS, which goes down when the market goes up, and it goes up by 2x when the semiconductor market goes down. And we might see, last time, part of the way that we made tremendous growth this year, it wasn't because we invested in quantum, but it was because it was AMD, it was Black Sky for sure. But it was also, it was the focus on the tariffs. When the tariffs came out, we shorted the semiconductor market. And when the semiconductor market dipped big because of all of the tariffs, And then there was a hike on the tariffs, or hike on tariffs for semiconductors. They basically said all electronic goods are now 100% tariff or what have you. We ended up buying SOXS. I think we made like 70%, something crazy during that time when the market corrected. So, we might end up playing some of the downside just to kind of hedge against some of the long-term corrections that we see coming out tomorrow, if that's the case. So we'll have to watch and we'll see how that goes. So the next, we have a few other ones. We got CTM. I did a breakdown of CTM earlier this weekend. Shiva, I would love for you to go take a look at that. We did it in our live video. If you go to my live videos yesterday, nothing's really changed. They did bounce that $1 price point. That government cybersecurity provider. They process large amounts of data for the U.S. government, and they have a support level around 95 cents. And they got some runs recently. They've made up to about $1.50. They did bounce that 90-cent support level. We were looking for if the market continues green, despite having government shutdowns, meaning that we aren't seeing more contracts in the defense space right now. And you can kind of see that. We consider that over here, government shutdown data, that they still are seeing some momentum potentially. So if they can hold that and defy some of the odds on the government shutdown and hold that level, we are looking at a 10 to 20% increase up to that $1.15 range on CTM. I am not in any short-term positions, but we do got long-term holds on CTM right now. Same thing with Redwire, pretty similar outlook. $8 support level, bounced on Friday, key level. We did see them actually recover so far. We were looking, when we looked at them on Friday, they were around $8.50 or something. We're saying we could see this recovery up into this $10 range. We already see them recover up to 9. That's a 9% recovery so far since we last analyzed them. But next bullish level would be up to $10 a share for Redwire. They do have considerable amount of contracts, and market cap is lower than their total balance sheet of assets, which indicates, according to Benjamin Graham, that's what he looks for. And I do have long-term positions in Redwire for that reason. They're a space company in defense tech, and I've been able to meet them too at a conference and meet with some of their peers that they have partners with over in Colorado Springs at a SpaceX sponsored event, which was really cool. And I appreciate you all. Thanks so much. We were able to go to that event for free because of the support on YouTube. But essentially Redwire, they have some sensors, some quantum sensors, and some really high-tech cameras that they're putting up into space. And they have done some launches, and they're up there with some contracts recently. And they're also one of 14 contractors in a $2.6 billion deal, which they haven't seen any materialization from that. But if they do, see Redwire, I think a $10 to $15 stock. But yeah, again, they're kind of pushed down. They're consolidating back between that $8 and $10 support level. We've seen that before, support and resistance there on $8 to $10. So we're going to watch Redwire and how they kind of react on Monday. And APLD made it up to $39 on Friday. They were the only stock that was green, one of the only companies we were actually trading on this past week, which is cool. They reported earnings and they came in green. Didn't really reflect billions or anything like we might have expected if those leases materialized from the data centers that they're building for CoreWeave. But APLD still, had about 60 million in revenue, which gave them a big jump up to $35 or $39 on Friday, and then pulled back down as low as 29, and then recovering about 15%. Nice recovery. This is what we were looking for on Friday. We said this would be the bounce. I didn't even really move this info line. It was already here. We're looking for this 10 to 15% recovery. We did see that. So now we're going to watch here at Market Open, see how they react, how they hold above that $32 price point. If they can stabilize, maybe continue some of that uptrend, but use that previous rising resistance as the support. That would be the best bull case for APLD. So we're going to watch there. It's going good, Eve, and APLD is going well. Appreciate it. TaxSep says RZLV. Brutal says Rich Tech Robotics. We already went over that one earlier. Kind of just touched on Redwire. If you guys need more info on it, let me know. But yeah, $8 support on Redwire. Looking for that $10 resistance if you're bullish. Long term, I like the company. I hold the company. Short term, Obviously, we're seeing some volatility here, so you want to have a plan, and that kind of just applies to most companies at this time. But Taxum says RZLV. So I'm not going to really cover this stock. I mean, we can see how they came in on their recent earnings last week. But if I'm not mistaken, they had more liabilities than they did assets. Yeah, they came in with 3 million in revenue. Taxip. Oh, I don't want to say your name wrong. It's like spelled in like Russian. Um, but sorry if I say that wrong. I'm just gonna call you Tax. So Tax, they came in with revenue only 3 million, and it might look good. Revenue's up, 400% year over year, but it's really only up, a million. And then if you look at the balance sheet, they got more liabilities than they do have assets. Not a good spot for RCLV. I know that they're in like AI and stuff, but if any company has more liabilities than they do have assets, and they're a software company, like software margins are usually pretty good, right? So, I'm just not interested in a company. You shouldn't, most likely, unless you see something really, really profound, be looking at the company if their liabilities are greater than their assets. It basically means if at any time the debt obligations that they have are called upon, they could go bankrupt, essentially. So, just not probably one you want to really follow super deeply. NVTS, just a quick overview. That one's kind of similar, but in a different way. They've actually had okay financials, if I'm not mistaken. The semiconductor company NVTS, revenue negative 40 million or $50 million negative. They've had declining income. You can see that revenue declining quarter over quarter, increasingly negative net income. Not really the best look, but they did have 450 million in total assets. That's really good for NVTS as a semiconductor company. They're disciplined. They have plenty of runway. 1.75 billion though in market cap, kind of looking pretty high up there. They might be based in California, which is a good spot for a semiconductor company. But I don't think they had any major deals that they signed. Why were you watching them? I'm curious. What were you looking for, Angel, in NVTS? Was there a specific news, press release, something that came out that particularly has got you interested in the company? Or is it, that you're hearing about the company from others? I'm curious what's got you focused on it. Because what I've seen with them is that they've been talking about the market and now it's growing. Okay, they're powering some Chinese tech. So that's interesting to see. But didn't really see any big deals for them. So we're kind of watching for the big deals. And their revenue is declining. So I want to see that do better. And when we look at their stock, they're at a resistance level that they have been rejected at before at around $9.50. And they did just get recently rejected around 950. You could see that level kind of struggling to break back up above that level. So maybe they continue up. But currently, if you look at their trend along with the financials, not a lot of favorability. I would say they got a resistance level here, kind of that rising resistance level. And then they have a rising support level here. Okay. And they're kind of near the top, right? They could break out, it's possible, but they are near the top here at that resistance. And if you just kind of take a step back, right, kind of look at their trend that they're in recently, you can just see they got up there, they're kind of getting rejected, and the candles and everything else, or if you look at the RSI, the RSI is looking overbought, MACD is looking overbought as well, which indicates that they could potentially sell back down into that $7.50 range to $8 range. That's what I would see with the company. I'm probably not going to trade them too much. Excuse me. But yeah, interesting to follow them as they are in the semiconductor market. So we're going to continue to follow them. I don't have any long-term positions in them though. So guys, I appreciate you all. I see some great comments. Let's see what else we got. Hello, Will, APLD all the way. Let's go. Greetings and always grateful. Ideas on NVTS. Yeah, I don't really have too many ideas there. I don't know. You let me know what you're kind of watching. Peter, SES AI, we've taken a look there. I'm pretty sure, if I'm not mistaken, SES also had more. No, they're doing okay financially, but they were negative net income. NVIDIA owns shares of NVTS. Is that true? AJJ says modular data center play DUOT. I don't have that on my watch list, but it could be worth a look. Thank you. I'll write it down. Grand Maple HNST. Okay, some good ones. Marty says, hey, DPro, is that like $13 a share? That's a pretty small market cap. Does it make it easier for their share price to go up as long as they're running their business correctly? Yeah, if they're running their business correctly. DPro, when you look at if you look at any drone technology right now, you'd expect kind of hype, especially with AI. But when you look at DPro from a financial perspective, right, you go jump into their financials, they haven't had any notable revenue. And their balance sheet is good, 28 million. Total equity is at 22 million. Maybe it justifies their current market cap. Maybe. But if they continue to build and grow the way that they're growing, as you mentioned, and they have good business and they continue to not be negative in revenue each year, as they are declining in revenue each year, but they continue to jump up like they did maybe this last quarter to get to 5 million a quarter and not a negative net income or something like that. How much money are they spending on drone tech, or how much are they spending, realistically, how much do they need to spend to turn a profit? You got to be able to make deals. You got to be able to reach out to companies. Is Canada spending on what they're looking for, or are they having to go commercial more? I'm not too sure about the delivery to the marketplace right now. It looks like they're kind of stagnant, or at least static on their revenue. So it's an interesting one, though. So I appreciate you guys. Thanks so much for tuning in. No discussion about rare earth replacement companies in the US after Friday. Wow. I mean, we've talked minerals for sure. Are you saying wow because you're disappointed? Or are you saying wow because you would expect us to look for those companies to buy? NVTS has a special high efficiency resistor that NVIDIA might use their data centers. Oh, interesting. Thank you for that info. That's a good one, Dolphin, to look at. We'll definitely be following that one. I wrote that one down. Thank you so much. Jose, AMDL. Yeah, AMD is a good one to watch. We're definitely in it right now. Jose, so we'll continue to look at that Market Open. Guys, I appreciate you all. Thanks so much for tuning in. If you want to join us at Market Open tomorrow morning, we'll be there live. I'm going to be there at 6:30 a.m. Pacific time, 9:30 Eastern. If you ever want to join us and see our entries, see our exits, we'll be there tomorrow morning at Market Open. And you get a free t-shirt when you join. And it's the second link in the description below. Thanks, Jose. Thanks, AJ, Ancient Astronaut. Thanks for tuning in. And I'll see you guys in the next video. See you guys next week. It's going to be a good one. Bye now.